Okay, let's have a look at November then for Delaney 2017. So a creditor who was owed $4,000 by Delaney accepted equipment. The book value was $3,200 in full settlement of the debt. This equipment cost $5,400. So number one, we're going to the creditor is going to reduce by $4,000. The equipment is going to reduce by $5,400. The book value was $3,200 and it cost $5,400. So that's going to give us the depreciation, so the difference between the two, which is $2,200. The debt was $4,000. The book value was $3,200. So the difference of $800 then, that's going to be an extra income. So we kind of got a discount on the debt. So let's put this into your tabular statement. So your creditors are going to go down by $4,000. Your equipment is going to go down by $5,400. And then on that equipment, you got depreciation of $2,200, which is a difference between $5,400 and $3,200. So $2,200. And then we made a profit then of $800 because the debt was $4,400 and you only accept $3,200. So the difference, so minus $3,200 for your assets, and minus $3,300 for your liabilities. So with that one, remember, creditors are going to go down by $4,000. The accepted equipment, the book value of the equipment was $3,200. So if that's the value and our debt was $4,000, well then we didn't pay an extra $800. So we kind of got a discount received. So that's going to increase our profit and loss by $800. We're going to reduce our equipment by $5,400 because that's what we're getting rid of. And the difference between the equipment cost and the value of it now, your depreciation, which is $2,200. So your double entry would look like this. Your creditors, so remember your creditors are liability, decrease the liability we put on the debit side. Equipment is an asset, decrease an asset we put on the credit side. Your accumulated depreciation is going to go on the debit side. Disposal then, so if you look at your double entry, we're going to credit our equipment account, debit our disposal account with the value of the asset, debit our accumulated depreciation, credit our disposal account with the depreciation. Then you're going to debit your creditor account, credit your disposal account, and that's going to give you a balance of $800. So you're going to balance it off, or debit your disposal account and credit your profit and loss account with the income.